Good afternoon, it's Christian Thwaites of Brown Janikowski, Tuesday afternoon, February the 16th. Well, it's been a bit of a quiet week. China was closed all of last week, and China's been the source of much of our problems and distress over the last couple of months. It opened up yesterday and there was a small rally, and of course our markets were closed yesterday on President's Day, and today, Tuesday, also showed a small rally, but on not a lot of volume. So it's difficult to tell whether it's the quiet after the storm or we're heading into a storm after a little bit of quiet. Markets are still certainly very nervous about oil, still about China, and the emerging concern which came up over the last week or so is the prospect of negative rates across a broader spectrum than it is already. And while you might hear a lot of thoughts about what negative rates will do, the fact is that no one really knows. It's never happened to the global economy on a scale that it's going through right now. So we are in a period of great deal of uncertainty. So here's a look at, say, a historic chart going back 30 years. And this, one of the reasons that bear markets are so uncomfortable is it goes back to the old adage that stocks take the escalator up slowly, but they take the elevator down very rapidly. And you can see some of that here where we just showed the 6-month change of the S&P. So these are the average changes over the 6 months during these periods. And you could just cast you over to the right hand side. You can see we went into negative territory on a 6-month return a couple of months ago, and this is not at all unusual. If you take these different crises which we've labeled here, everything from the Fed raising rates in the early 80s through the 2 Gulf Wars and the Euro and Greece, the European and Greece crisis of a few years ago, they happen about every 2 or 3 years, pretty much on time. And the current one now is certainly the oil, the China, and the rate story. So this is the kind of fluctuations that we're going through. We don't know quite how they're going to fit out, but certainly these are not uncommon for these to happen to markets. Right now, the big story is the EU, the ECB came out yesterday saying they wouldn't hesitate to act, and they're very good at talking about this, and we expect some follow through on that. Meanwhile, the 10-year Treasury is settling at about 1.8%. It's a quiet time, and we expect it to remain that way at least for the rest of the week. Thank you.